Welcome to episode 114 of the BCF ORG podcast, The Business of Business. I'm Brian Fisher. In the previous episode, 113, our guest was Colby Varley, discussing high-stakes logistics. Today's episode discusses business financial insights with Jason Kruger. This podcast series is targeted to business owners and C-suite executives. It reflects my 34 years as a business owner and subsequent years as a business mentor and consultant. It focuses on the various subjects and topics to help you run a successful, profitable business. They're approximately 15 minutes long, so you can listen while commuting. Hopefully, you'll find one or two takeaways to implement per episode. Based out of San Diego, California, Jason Kruger is the founder and president of Signature Analytics. Jason is a leader and business advisor focused on helping business owners, leaders, and executives improve performance by providing greater visibility into their financials so they can achieve their goals through value-added financial information. Jason has over 20 years of experience in the accounting and business advisory field. His 5-step process for client success focuses first on goal and roadmap development, ensuring confidence in timely and accurate accounting, and finally, through bringing clarity to a company's financial information through reporting to drive forward-looking decisions that impact business value, margins, improve cash flows, and so forth. Following this process from the beginning ensures you understand the goals and puts you on a path to success. Jason is shaking up the way business owners run their businesses by highlighting the gaps in data and reporting that many business owners face, and sharing insights on how to improve profitability, increase productivity, and run your company smarter. Let's welcome Jason Kruger. Jason, welcome to the BCF ORG podcast, The Business of Business.
Thanks, Brian. Glad to be on.
Thanks for joining us today, Jason. Jason, I'm always interested in people's stories. What's your background in becoming the founder and president of Signature Analytics?
Yeah, so as you might guess, I started my career in finance and accounting. Started in public accounting, most of that time with Deloitte in the Southern California market. Deloitte, as you probably know, is one of the largest, considered one of the big four accounting firms. Spent close to 10 years at Deloitte in the financial statement audit function, and decided to leave and start Signature Analytics because I saw a lot of our clients in the small and mid-market really deserved better than what they had as it relates to accounting leadership, financial leadership. And so a lot of companies look at the accounting side and the financial side of their business as a necessary evil that they have to invoice and pay bills and do their taxes at the end of the year. But as they grow, they start to feel the pain points of not having good financial information, not good visibility and cash flows, struggle trying to get financing from a bank because they don't have good financial order as it relates to their business. And so started that in 2008. We grew it to about 75 full-time employees, where we support companies on an outsourced accounting and CFO advisory basis, really filling in the gaps and providing that value that I discussed. And then in November of 2024, we were acquired by Citrin Cooperman, who's a larger firm on the East Coast that is full service tax, audit, and other advisory services. And so they were looking at us to be that West Coast presence from a client accounting perspective. Our culture and the types of clients that we service really fit with what Citrin Cooperman's doing, and it's been great so far. It's only been a few months, but we're moving forward, and we're pretty excited about that.
Well, that fits right into this episode's topic of business financial insights. What makes an efficient accounting process, and how can you tell if it's working?
I would say the end result for a business owner or management team is two things. One is to be able to sleep at night. You have to have comfort that the day-to-day blocking and tackling is being done effectively. So are you paying bills effectively? Are you invoicing effectively? And are you collecting cash? And then the second piece is, are you getting good reporting and good financial information on a consistent, timely basis that you can trust and that you can use to make decisions on. And as we talked before we started recording, which is how do I use that information to look forward in my business and really understand what's going to happen based on the decisions I make. So from an efficiency perspective, I would say having good processes for an oversight on the day-to-day activities, ensure the oversight and review that's happening. And then from a monthly close perspective, that's the critical point is there a process to close the books on a consistent monthly basis so that you get good reporting from the finance side of your business? And if you don't have a good process, which means and I won't get too geeky here on the accounting stuff, but making sure that you have supporting schedules and reconciliations of every account on your balance sheet is critical. That then flows through to the P&L and ultimately gives you confidence in the financial information. And so that is a critical component to the financial health of a business. And then the last part I'll say is understanding cash flows, not just historically, but future cash flows as you look into your business. That is the number one level of item of importance initially is, do I have confidence in what my cash flow outlook looks like over the next, let's call it 3 months? And based on that will help me make decisions as well.
Boy, that is so important, being able to look forward on cash flow. It's huge.
Yeah, it's the first thing that we do with all of our clients is we say, okay, first thing we're going to do is make sure we have clarity and understanding of what your future cash flows look like. And so even if your books and records need some cleanup and need some help, we can still figure out what your cash flow situation looks like, so that you're not running blind and you can sleep better at night.
Well, in the business world, things are not always up. There's business cycles. How do you weatherproof your business for a possible recession?
Yeah, it goes back to what we were saying is making sure, one, you have good processes to produce good financials that you can trust. Implementing a forward-looking cash flow forecast is critical. We recommend doing it on a weekly basis. Depending on your cash situation, you might be able to do it monthly at least, but being able to look forward is critical. We have some clients we work with cash flow on a daily basis because cash is tight, lots of transactions, might be, many transactions, high volume transactions. And so that can be a challenge as well. I would also say from a weatherproofing perspective, if there's concern about the economy or the trends of what's happening in your business, making sure that you have a good relationship with the financing opportunities. So banking relationship. So if you say, hey, who's your banker? Well, if your banker is, the person you see at the branch behind the counter, that means you don't really have a solid banking relationship. So let's make sure you have a solid banking relationship where you can start to establish that relationship maybe with a line of credit now. Maybe you don't need a line of credit now, but if you have that and you have good financial position right now, you can obtain a line of credit and really start to plan for, what might be happening in the future. So that gives you that flexibility. And once there's a downturn, it's very difficult to get that financing, or financing becomes much more expensive. So getting that when things are good is definitely the way to go. And then for businesses that are in the manufacturing or distribution space that are dealing with inventory, making sure that you really have an understanding of your inventory processes and the flow of inventory. I always say that inventory is basically your cash on the shelf. So if you have way too much inventory, you have extra cash sitting on the shelf that you could be using for operations because it's, you could be managing your inventory a little bit better.
I met with our business banker 3 times a year, and it was really great. Banks are kind of funny. It's hard to get money when you need it, but they're willing to give you lines of credit when you don't need it.
Yeah. And the other thing is that if you don't have your financials in order, you're not going to get financing. And so the first thing that the bank is going to ask for is your financials. And if you just hit print on QuickBooks and send your financials over, there's a big risk that you're not going to be getting the financing that you want or need for your business. So banks want to develop a relationship. They don't want a transactional relationship where it's, hey, hi, nice to meet you, give me money. They want to learn about your business. They want to trust your business. And the one of the initial things that can give them that sense of credibility is a good financial package that's presented to them when they ask for the financial information.
Yeah, I can't overemphasize how important the relationship is with your business banker. They're very, very important.
Yep. Yeah.
We're speaking with Jason Kruger, founder and president of Signature Analytics. Jason, how can you tell if your business is really profitable?
Yeah, it goes back to, again, financials, right? A good example I have is, and cash flows. So I talked to an owner of a manufacturing company a while back, and he showed me his financials, and they looked like they were profitable. And he said, "Hey, look at my financials. Look how profitable I am, but I don't have any cash. Where's all my cash?" And I said, "Well, there's one of two things. One, it's your financials are not accurate. He's only looking at the P&L. He's not concerned with the balance sheet, and I know the balance sheet can be more challenging to understand or read, but if your balance sheet is not accurate, then your P&L is not accurate. So that's one. The second is that, as I talked about before, is all of his cash may have been hung up in inventory, or it may be hung up in accounts receivable. So if you're not collecting your receivables, that's where your cash is. If you're not managing your inventory effectively, your cash can be there as well. But from a profitability perspective, then it's not only looking at the business from as a whole, but then starting to break it down by service line or product line. And that's where we get into also the importance of accrual-based accounting. Accrual-based accounting will give you that, it will allow you to look at your business and understand the trends of your business more accurately. Cash basis accounting is simply when the cash comes in. So your margins may look skewed from month to month based on when you collect or when you disperse cash. From an accrual based perspective, you're able to see the trends and really narrow down into the profitability and the margins of your product or your services that you're selling, so that you can then make decisions to improve those margins over time. And then we want to break it down by product line or service line, so you can see which products or services are actually more profitable than others. And we're looking at, we want to look at it down to the percentage point. If we say, hey, if we're talking through your business and you're saying, well, our margins are somewhere between 40 and 50%, that's a big difference. That 10% is significant, because any 1%, 2 percentage points, that drops straight to the bottom line if you can improve your overall margin. So if you have a $10 million business, 1 percentage point improvement in your overall margin, that's $100,000 that drops straight to the bottom line, that either goes into your pocket as a business owner or allows you to reinvest back into the business for future growth, future opportunity, those things. So if we can improve your margin by 1%, let's say your $10 million business, 1%, think about 5%, that's $100,000. So I'm sorry, $500,000. So looking at your margins and understanding that is critical to be able to peg that number and then improve upon that over time.
A lot of businesses don't look at that, and that's just a lot of money sitting
Yeah.
out there.
Yeah. It's a lot of money. And it's also, let's understand what your goals are. Most people that start a business, their goal is to grow it and hopefully have some sort of an exit into the future. Others may want to transition to family members or others, but an exit is a big priority for a lot of business owners. And so understanding your numbers, managing your margins not only allows you to be more profitable in the interim period, but it also is a way to maximize the overall valuation of your business, so that when you do want to sell, you have a tightly run company, you've maximized the valuation, you can get up to 2 or 3 times the sale price that a competitor might get, just from having a better understanding of your numbers and maximizing the valuation that way.
Jason, what lessons learned or results have you seen with businesses or individuals that have implemented your recommendations?
Yeah, I mean, it's been significant. I mean, what we see a lot of times is companies that have outgrown what they had before. And so a lot of companies that are smaller, they start with a bookkeeper. They think that the bookkeeper can just manage the accounting department and they'll manage the operations. And then they hire a salesperson. I think that the salesperson will just do all that, and but what I found is not only is the finance side, is as a business owner, it's understanding all aspects of your business is critical to success. And so finance is one of that. What ends up happening is as companies grow without good understanding of finance, of the financial side of their business, they become stuck. They start running in that hamster wheel. They're not able to get financing. Their cash is always a challenge because they don't have good visibility into their cash flows. And so the team that got them there is not what's going to take them to that next level. And so we're able to come in and provide that accounting leadership at the controller level, at that CFO level, and fill in the gaps to ensure that they have that visibility. And once they have that visibility into their future cash flows, then that gives them more comfort to be able to make decisions. We've then also, as I mentioned before, start to drill down into the different key performance indicators. You talked about ratios before, or the margins of their business and profitability metrics, and talk to them about how they can improve those and increase those over time so that ultimately they become that much more profitable. And that's the real goal, is how do we maximize profitability? How do we make sure that you have that visibility so that you're prepared for conversations with third parties, conversations internally, and really being able to run your business effectively?
Jason, how can people get in contact with you?
Yeah, so I love talking to business owners. I'm happy talking, about anything. If I can help you, great. If not, I'm sure that I would know somebody that could. The best way to reach me is my email, which is the letter J, Kruger, that's Kruger, at citroncooperman.com. And Citron is with a C, Citrin, Cooperman.com. I can also be reached if somebody wants to give me a call, 858-228-5643. Always happy to talk to business owners, executives, anybody I can to help and forward their business.
Jason, thank you for joining us today on the BCF ORG podcast, The Business of Business.
Thanks so much, Brian. Appreciate it.
My sincere thanks to Jason Kruger for joining us today. Managing the performance of your company is one of the most important things you do as a leader. This podcast is on YouTube and over 20 podcast directories. In search, type BCF ORG. Be sure to leave a space between BCF and ORG. And don't forget to like, subscribe, or follow the podcast. If you'd like to reach out to me for business mentoring or consulting, schedule a speaking engagement, ask questions, make comments, suggest ideas, or potentially be a guest like Jason, please go to bcforg.com. There's a red Contact Us button in the middle of the homepage. All the podcasts are available by clicking on the website podcast page in the reference bar. These podcasts will be released the first and third Tuesday each month. In our next episode, 115, our guest will be John Martinka, discussing Exit with Style. In business, running a successful, profitable business is the ultimate scorecard. You are never done and can always be better. It tends to be more fun than work, frustrating at times, but can be very rewarding. From BCF ORG Corp., I'm Brian Fisher, wishing you the best. Thanks.